Hello and welcome. My name is Joe O'Mara. I'm the Head of Aviation Finance with KPMG. And on behalf of KPMG and Airline Economics, I'm delighted to be joined today by Aengus Kelly, the CEO of AerCap. Aengus, thanks again for joining us for our 2022 Aviation Industry Leaders Report. I often ask people to tell us a little bit about the company, but I don't think people need to hear what AerCap are, they're about. So maybe as we get into it, maybe to level set at the outset of our conversation, can you talk to us about how customer performance evolved over the course of 2021? And I should say we're recording this on the 11th of January.
Sure. Joe, throughout 2021, there was a steady improvement in the performance of the airline industry. And that, of course, manifested itself in how we dealt with the airlines in terms of the rentals being paid on time, the lack of requests for deferral agreements, and probably most importantly then, the demand for additional aircraft. We saw that begin in the fourth quarter of 2020, where we saw there was a fair bit of optimism in the United States and in Europe regarding the summer of 2021 and indeed the summer of 2022. And that optimism proved to be well-founded, to be fair to the airlines, until the end of this year, when we've had the onset of the Omicron variant, which has paused the progress, but certainly I don't feel it has knocked it backwards. I feel very confident about the outlook for 2022 as a whole. I think we will see a return to 2019 traffic levels in many parts of the world as we go through the summer of 2022. That'll be focused on the shorter haul networks, but the long haul will follow in the no doubt, but not in 2022. So, look, I think it's been a steady improvement. Airlines are extraordinarily adaptable companies, and they've proven that over many cycles and how they've come out of them and adapted to new regulations, new requirements, be it security or other.
Can I ask you mentioned a couple of locations there. Can I ask you, on the opportunity side, is your focus geographic specific, or is it back to airline fundamentals? Where are you seeing those opportunities to place aircraft?
Over the course of last year, most of our placements have occurred in the US and Europe. Obviously, there hasn't been much happening in Southeast Asia. When I say Europe, I would include Russia in that market too. Russia's been fairly robust. So that's where the bulk of the placements have gone. But even in China too, in fairness, I should add that on new technology equipment, there's plenty of campaigns in China for new technology assets on the narrow body side ongoing, obviously on the Airbus side at the moment. For that in the Chinese market, but also then in South America, a few bits and pieces, Africa, a few bits and pieces, but for the most part, as I would say, dominated by the US, Europe, and then on the new aircraft side, still plenty of robust demand out of China on the narrow body side for new tech.
And in assessing those new opportunities in the kind of post-COVID environment, have your assessment metrics changed? Or where are you particularly focused on when you're interacting either with a customer you're growing your fleet with or a new customer?
The metrics haven't changed much. You're still looking to see are the airlines viable. Now, those airlines that have come through the pandemic have shown, how adaptable they are, that they have a viable business model. So I think they haven't changed that much. I think there is new capital coming into the airline industry, and certainly there requires a fair bit of rigor as to see whether or not the new entrants have the knowledge within the management team, the infrastructure they will need. The obvious things you think of are landing and takeoff slots in an AOC, but there's a lot more that goes into it than that. And then, of course, the financial support that they have in the startup phase of the airline. So we've seen a number of successful startups so far in the US. We've got a few now in Europe as well with Play, Norse, And I suspect we'll see one or two more.
And moving on to the leasing side, we've clearly seen the importance of the leasing channel be appreciated, I'd say, by the airline sector. And it's been so important in building into the resilience of the overall sector. That there's a line of thinking that we've probably breached that 50% number of total aircraft that are now leased, and that it's going to have a shift post-pandemic in a real material way. Would you agree with that proposition? And if so, do you think there is a ceiling on where that number of leased aircraft goes to?
I used to think there was. I'm not so sure any longer. I certainly believe that by value, we've probably surpassed the 50% of the global fleet is in the leasing community now. And I think by number of units, that's just a timing issue, because the bulk of the units coming out of the OEMs today are either on lessor order books, sale lease back pretty quickly thereafter. So I think that's inevitable. I think also the pandemic has shown that the leasing business is a good business if it's well managed and you have a global platform that's able to move assets around the world, that can manage the interactions with the customer base in times of great stress and the manufacturers. I think it's proven how resilient the aircraft leasing business is. And that's why we're seeing so much capital interested in the sector at the moment. I think that it's smarter this go around. Certainly between 2014 and 2020, we had a lot of new capital come into the sector. Some has done well, some has not. I think those that came in that just thought it was a spread business probably have not done well, and they'll probably exit the exit stage left. But those who understood the risks in the business and worked with very competent teams and platforms that had infrastructure around them, I think those players have done well and are committing additional capital to the space. But of course, we have seen public examples of certain platforms being sold, merged. I'm leaving aside the GCAS one because that was obviously a global platform, but other smaller subscale platforms being rolled up. I think we'll continue to see that, and I think that'll be a good trend as well for the industry.
And from a pricing perspective, I know people can focus on lease rate factors and a lot more than that to a transaction. There was probably a bit of a sense coming out of COVID, maybe in the middle of last year, there was that bounce for the lessor in terms of pricing. How do you find the competitive environment on the pricing side evolve over the last 12 months?
Some parts of the market are more competitive than others. I mean, we're in all parts of the market. And you certainly see there are differences in different parts of the market. I think, look, if you have a common or garden A320 and you're just trying to move one unit, I think you'll find it very competitive. Airlines much prefer to deal with someone who can provide a block of sister ships. That's a given. So from our perspective, we're very rarely just there with one unit trying to place it. That's unusual. And I think the advantages of our size are very evident when it comes to placing assets. You put us in a different position to anyone else in the industry, of course, where you will nearly always have blocks of sister ships or an existing fleet with a customer, or airplanes delivering to the customer, or engines on lease to the customer. So the competitive dynamic is a little bit different there. But as a market overall, lease rates certainly firmed up very early in 2021. That started on the new technology NEOs. And as we've seen coming out of every prior downturn, it then pulls up other assets because, yes, of course, you could say, right, the 321 NEO is the most desirable asset out there, followed by the 320 NEO and the MAX 8. The MAX 8 is a very good aircraft. We've a good bit of interest in that asset, actually, and we've leased quite a few of them. So the 321 rate can never get too far away from its competitor, or the alternative asset, the 320 or the 737 MAX, and then they drag up the 320 and the 737-800. The freight market has obviously helped a lot on the 737-800 and to some extent on the 321 classics too as well. So I think, look, across the board on the narrow body side, we've seen a tick up. It's surprising on the wide body side, we're starting to see a significant uptick in levels of activity. We see that, of course, from our engine leasing business, because over the course of the pandemic, many airlines wanted to avoid shop visits, particularly on big wide-body engines like the GE90, where you could be spending 12 to 15 million, easily 15 million a pop on a shop visit. And so we've seen a significant recovery in 777 flight hours. We've seen a big recovery in 787 flight hours. And we would be hopeful that, now these are not back to where they were in 2019, but just relative to where we were last year. And we would hope that trend will continue throughout the year here.
And more broadly on the trading environment, Aengus, you guys buy and sell more aircraft than anyone. How have you seen that market evolve, and where do you think it sits currently? I've seen a relative stop to trading in 2020. Has it picked up in a real way, and where does it sit at the start of 22?
It's very robust. I think we've seen very strong interest in assets we've been selling over the course of 2021. Of course, look at the end of 2020 into the first half of 2021, buyers were wanting assets that were on lease and long-term leases, etc., on the narrow bodies. But again, we're seeing that migrate as buyers realize, the aircraft leasing industry is a crucial part of the infrastructure of the airlines, and that we have seen a huge fall off in deliveries of aircraft from the two OEM. Well, from one OEM in particular, obviously Boeing. Airbus has continued to deliver a lot of A320s, but hasn't delivered much on the wide body side. Boeing hasn't delivered anything on wides or narrows. And it'll be a long time before Boeing gets back to the 2019 levels. So a lot of the educated buyers are looking at it and saying, we certainly see the demand over the next several years for existing technology assets. And, we're certainly seeing good pricing coming back as we look to sell assets. No question about it. The market turned a bit faster than I thought. I'll be candid, Joe, how quickly the price of assets started to rise in the second half of last year. We certainly saw significant price increases in as I said, on the new tech side, but certainly then on the narrow body side of the 320s and the 737s. And then we're started to see it recently in the 787 and A350 market, the more desirable of the wide body assets, and indeed the 330neo, it has to be said, actually, that the prices of those assets are moving upward. And I think we will see a market then for the last part of the market, probably the 777s, the 330s. But I'd be confident enough that as we go through this year, we'll see movement there as well in the right direction, because we can see what's happening on the engine side. That gives us the confidence there, particularly on the 777, actually.
And maybe moving on to the phenomenal achievement of the year in the GCAS transaction, and congratulations on closing something that I think everyone was just amazed by. Can I ask you, first on the debt side of that transaction, you went out and raised 21 billion in unsecured, another 2 billion in secured to fund the transaction. Can you talk us through the challenges in raising that quantum of debt? And you mentioned 2014, kind of referencing back to the ILFC transaction. Things that were similar or things that were different as you came at it to raise that level of funding? And I appreciate this was a level of 14.
Well, thanks very much, Joe. If we talk about the transaction itself, the key thing, just like with ILFC, and it's all the building blocks, is that you need to make sure you're in a position where you don't have to go to the capital markets. You don't ever want to have to play chicken with the capital markets. And similar to with ILFC and with GE, there's no way that either of those transactions would have happened if we didn't have the committed funding in place when we signed the sale agreement of the company, the purchase agreement of GCAS. So what that meant was that we needed to have a committed bridge facility in place. And so we had a $23 billion bridge facility fully underwritten by Goldman and Citi. And that agreement was negotiated concurrently with the transaction. So that was in December of 2020 that was occurring. And early January, when the vaccine, and certainly in December, wasn't really there, and it only started de minimis amounts of rollout in January. But Citi and Goldman underwrote the whole thing in full themselves because we wouldn't allow them to syndicate it prior to closing. We didn't want anyone to know what was happening. And so they took it on the best part of 12 billion each themselves. Now, we had to pay a lot of money for that on the day we signed the transaction, but that allowed us to close the deal, because I don't believe GE, just like ILFC, AIG before them, would have closed without committed funding in place. And then, very importantly, to your original question about financing the transaction, when you have that, you don't need to hit the market immediately after you announce the transaction. We announced it in March, closed in November. And if we didn't have the bridge, you would have been panicking and you would have had to hit the market at the first opportunity. And the market would have known that too. And your spreads probably would have widened significantly. But the fact that we had it and we had the bridge, we could sit back and wait and wait and wait. And we could decide, do we want to hit the market before closing, on closing, or whatever. In the end, we did it very close to the actual closing. But that was vital that you had that insurance policy, an expensive insurance policy, but in the end, it paid for itself. And then, I think when we went to the actual fundraising itself, the roadshow, if you will, the virtual roadshow as it was, and we got 76 billion of orders, that spoke to the enormous interest in the transaction in AerCap and the industry, I might add. Certainly when I started out in the business, whatever it was, over 20, a long time ago at any rate, raising $1 billion was a huge deal. And, very challenging for anyone in the industry to do something like that. But the industry has just matured so much as the financial markets become more and more comfortable with aircraft as a very investable asset, and particularly when it's well managed by a very competent asset manager. So, look, I think it was a testament to the AerCap business model, of course, the transaction, but also to the entire industry, that an aircraft, any aviation business, was able to attract 76 billion of interest. That is staggering, quite frankly, if we look at the history of aviation, that any entity in the sector is able to generate that type of interest.
Can I ask, were there trends along where that interest was coming from? So the types of parties that were seeking to invest in the debt, what were they like?
It was, it was global. Focused predominantly in the United States because it's a dollar offering. But the thing about the United States is that many of the funds in the US are managing funds from Europe or from Asia, and they just manage the dollar account out of the US. So, look, we found a very positive global reception for the transaction across the board. Many of them would have liked us to have issued other parts of the capital structure, such as convertibles or perpetuals, where you would get equity credit with the rating agencies. But we had seen that in the intervening period between March and November, that the GCAS business had outperformed, and we didn't actually in the end need anything like that. And the difference with this time around and the last go round with ILFC is that the debt equity ratio is materially lower than where it was then, and we're investment grade out of the blocks. Whereas 8 years ago, now we had much higher leverage on the balance sheet. We were close to 4 times. Here we're sub 3 times, and the business has performed well. The cash flows have been strong, and so we're very positive about that.
Were you pleasantly surprised at the kind of secured unsecured split? Obviously, it's virtually, or to a very significant degree, all unsecured funding.
Yeah, look, that was our choice. When you're putting these things together, you just don't know on the day of the match how things will go. So you always want to give yourself the maximum optionality that you can have. Of course, we had other sources of capital that were available to us if we wished to draw on them when we were going out to the market. But then, we saw 76 billion of demand on the unsecured. We saw massive demand for the secured side as well. So between the two of them, we certainly were well north of 85 billion of demand.
And maybe more broadly on the aviation finance space, you say you're the perfect example of what an investment grade lessor can raise, right? And above and beyond. We've obviously seen the market be very receptive to the other IG rated lessors, probably less than 10, but be able to tap the market in a very real way. Are you confident that trend will continue? As you say, it speaks to the sophistication of aviation finance and how it's perceived by the market. So the rates are reflective of the macro environment, which we might chat about in a sec. But are you confident enough that unsecured market will remain open to those large, well-run IG-rated lessors?
Oh, I think so, totally. I mean, it remained wide open during the pandemic. We were the first lessor to reopen that market in 2020, in June of 2020. And so, yeah, look, I'd be very confident that the market for IG-rated lessors is extremely robust. I mean, it went through the greatest challenge we could ever imagine, and we came out with flying colours as an industry. So that was the real test. The IG lessors are really, to have more than 2 or 3 of them really only occurred in the last 4 or 5 years. And there might have been some question marks around whether or not, A, the ratings would hold up in a crisis, and B, would the investors continue to support those companies? And the answer to both was positive, extremely positive.
And the other element of capital markets important in aviation, I know space you haven't played directly in for a while, it's around the ABS market. Would have funded 10 billion of aircraft in 19, 2 billion before 20. She came back really strongly in 21. So you had somewhere in the region of $7 to $8 billion of aircraft that has been funded. Obviously very important for the overall trading environment in the aviation side. Were you surprised at how well that market has come back? And is it something, given your size and scale, you might return to? And I know you've got certain doubts around renting the platform, but just your thoughts around where that market sits and if it will be of interest to AerCap going forward.
I was very encouraged that it came back so quickly. I think once again, it speaks to the maturity of the industry, that investors understand a lot more about the business and the durability of the aircraft leasing model. So extremely welcome that it came back so strongly. And I think it will continue that way. I think those investors that got involved there will do very well out of it. From our own perspective, look, you've got to remember, we invented the aircraft leasing ABS model back in 1996 at the Airplanes Group. I was proofreading the prospectus for that thing. And then with AirCo as well on the refinancing. So we're certainly not against the vehicles. It's just a question of whether it makes sense for us, and we'll certainly look hard at it. I'm keenly aware that many aircraft we have sold over the last 7-8 years go into the ABS businesses. But the only thing from our perspective, as we said, one, as you say, do we want to rent out the best platform in the world if we don't get adequately compensated? And 2, when we dispose of portfolios, we have a asset mix that will work for the buyer. The buyer then generally has to hold some of the portfolio we sell to them, because not all of it would go into their ABS transactions. We will generally sell a 60-40 wide narrow split in any portfolio sale we do. But look, I think we'll certainly look at the ABS market for sure. And when we have partnered with strategic partners, we're quite willing to service those vehicles for them. So it's not that we're against it. We just need to make sure that it works for all parties. And we're delighted to have, the partnerships that we have with the partners that Cheek has brought on board, and the historical AerCap ones we have as well, which are based in various parts of the world, in China, the States, Canada, and the Middle East.
You mentioned the debt equity ratio sub 3 on closing at GCAS, but with that kind of broad commitment to bring it lower again in relation to maintain the strong rating that you have. Can you talk to us a little bit of what that divestment strategy, or is it a divestment strategy, will evolve over the course of 22?
The good news, unlike 8 years ago, we had to sell assets. There was no choice because you had to get the leverage down. You don't have to do that. The operating cash flows of the business, particularly that intervening 6-month period, because under the terms of the transaction, we held all the cash generated. There was no purchase price adjustment from 1 March to closing. So that helped with the debt equity ratio. So there's no need to sell assets. But of course, we will be disposing of assets, but it'll be in line with what we normally do, which is how we want to shape our portfolio. And I think if you look to how the type of assets that we moved over the last 7 or 8 years, you'll see similar behavior here. in this transaction also.
Can I ask you maybe a more broad question on being a listed lessor? It's an area we've talked about in the past. We've talked about being privately owned, listed, and benefits and challenges coming with both. Can you talk to us a little bit around where you sit now as a listed lessor, the size and scale you have, and the challenges and opportunities that brings with it? Obviously, a lot of volatility in the stock market over the last 21 months or so, but just curious as to how challenging that's been to manage from your perspective.
It's just part and parcel of the job. You get on with it. But the opportunity it presents is unrivaled in the industry. I mean, just look at what we've done. We bought Genesis, the shareholders in Genesis, the board said if we sell, there was a cash buyer competing against us in Genesis way back when in 2009. And the board of Genesis said, well, if we sell for cash, we lock in the losses for the shareholders. Let's go with AerCap. We can ride some of the upside. The exact same was true again with AIG when we said to them, I said to Bob Ben-Moshe, the CEO of AIG, look, Bob, yes, there's a large loss on day one that you'll have to take, but take a large stake in AerCap and there'll be a recovery in this industry and you'll do very well. And that made us number one in the world. Then with Larry Culp at GE Aviation has one of the largest lenses in the world, if not the largest, into what's happening in commercial aviation and where it's going, given that they develop the engines and the next technology of engines, they're going to be developing them and the time frame. Larry Culp saw, yes, okay, I have to take a significant charge in day one, but I'm very confident in the recovery of aviation. I can see into more of it than any probably him and the boss of Boeing and Airbus. No one else really sees more on the manufacturing side. And he had the same playbook, and he said, yeah, that makes a lot of sense. And it served him very well and General Electric very well. So I think, whatever issues there are around whether stock price is up or down or doing an earnings call, that pales into insignificance when you look at the tremendous advantages that the public market has given AerCap. But, look, it hasn't worked out for everyone. You have to be able to use that to your advantage. That is one of the tremendous advantages of being a public company, is the acquisition currency. That's beyond cash.
Before we move off funding entirely, just want to bring back a quick point. We're probably moving into a rising interest rate environment. We have those kind of indications that the Fed raises will be coming over the course of this year. Your thoughts on how that impacts you? Do you view that as net negative, potential positive, neutral? As you move into a probably higher interest rate environment, what are your thoughts on that for AerCap?
There's two aspects to it. The inflationary component of it, of course, is what people are focused on. So first one is the velocity of the move. If the movement in interest rates happens in a gradual fashion over the course of the next couple of years, and we can put it through our business model, then that'll be fine. If there was a sudden sharp shock, parallel move in the yield curve of 150 basis points over a short period of time, you wouldn't be able to pass that on so quickly. But you would eventually get there, but there'd be a lag where you'd have to eat that. But I think that's unlikely. Generally, historically, rising rates have been good for our business. Rising rates are good because you have inflation and you have an increase in asset values. And when I look around the world, what's happening today, I don't think Airbus and Boeing will be immune from supply chain disruptions that's impacting every industry in the world. I think they will struggle with the production levels they're hoping to hit. And I believe that we will see inflationary pressures, upward inflationary pressures on the metal of aircraft as we go through the next couple of years based on what we see at the moment.
Maybe coming back around the M&A point and your thoughts on the importance of scale, right? You now have AerCap, very significant gap to number two, and then a cluster. Say that's whether 10, 12 very large lessors. Your thoughts on where the market may go over the next year or two in terms of consolidation? Do you see a situation where those other players get a lot bigger and buy up the smaller ones? Or do you still think there's a chance for new platforms? We've still seen US private equity come at the space and a proliferation of new platforms since the pandemic hit. Your thoughts in that area?
There'll always be room for competence and excellence. You as this thing I may have said to you before, like in any space, you have the innovator, the imitator, and the blithering incompetence. I think we will continue to see as a general trend consolidation. Benefits of scale are just too important. And that could be with the airlines, with the MRO shops, with the engine manufacturers. You spend more on an airplane over the life of the asset on maintenance than you do on the day one purchase price of the airplane. People often forget that. And if you don't have extremely competent people in the business managing the metal and the engines itself, you can lose an awful lot very quickly. Generally speaking, of course, with scale, you just tend to have better people, more people, and you have more access and more leverage with the engine OEMs and the MROs. People, when they talk about scale, they just think of the obvious stuff like buying from Boeing and Airbus. But as I said, if you pay $50 million for an airplane, you'll spend more than $50 million on it on the maintenance side. So you've got $100 million investment over the life. Every dollar is as important as the other dollar, but people get really wound up about the purchase price, and sometimes they don't really realize the costs that come after that and how to manage those. So look, I think consolidation is good. I think it's welcome. It's been a fragmented industry for too long. I do think we will see it happen, and I think it'll be kind of a snowball effect, because those who are consolidating now, others who aren't will say, am I just going to get left further behind? And I think they will. There will, of course, always be room, though, for startups who are not just startups, but smaller players who are very good at what they do. I think it's very difficult, though, for smaller entities to try and be all things to all people. I think that those days are kind of gone, and you have to pick your area of expertise if you are one of the smaller lessors. And I think we will see the big get bigger. I think that's for sure.
Shifting gears, Aengus, and chatting about climate change and ESG, hugely important area to the world, hugely important area to aviation. In the context of aviation finance, are you finding the ESG agenda having a real impact on your business now? I can ask that both in terms of maybe the profile of metal, where you clearly put a focus now on new tech, but also on how you're interacting on the debt and the investor side. We've talked about the huge amount of debt you've been able to raise. Curious as to whether ESG came up in any of those conversations, and just what you're feeling from the shareholder perspective.
It came up in every one of those conversations, and we knew it would, and it had been for many years. I believe we're the only lessor that has the MSCI rating. We were just upgraded actually last week, and we've been at the forefront of this for many years, and the industry as the leader. And our ESG reports and our ESG targets have been set out for the last several years. We formed an ESG committee on the board as well. But as I said, I believe we are the only aircraft lessor with the rating, the ESG rating. And as I said, it was recently upgraded. In the calls with the investors, of course, you just take it on. You know that it's a very important matter and topic. And it was in our deck, our roadshow deck for the bond offering, as to where we had come from on the ESG front and where we are and what our targets are for the future. I think green bonds as well, of course, and ESG funds are the fastest growing funds in the investor in the investment industry, and you have to be very cognizant of that. I think we will see that trend continue. I think green bonds will be an opportunity for the industry going forward. So, look, it's coming. You have to embrace it and move along with it.
In the context of, say, a green or a less brown type of investment within aviation, do you think that is, from your perspective, just that focus on the newest technology, most efficient aircraft you can get your hands on?
That's certainly the obvious one, but I think there's much more to it as an industry. Air traffic control has a huge impact on the amount of fuel that's being burnt. Is there a way to harmonize air traffic control across multiple jurisdictions to make flight time shorter? Could we invest in air traffic control to make the flight duration shorter as well? So I think there are things that are out there. The easy thing for politicians to bash is just say, don't fly or buy more efficient airplanes. That's not viable. I mean, there's an inconvenient truth, which is that this world is built on oil and gas, and that ain't going to change. Not for a long time. We're not going to see hydrogen-powered airplanes carrying large numbers of passengers anywhere for 30 years, if I quote the CEO of Boeing, and I think he was right. SAFs certainly are something that we must look at, but again, we have to look at the cost of that. There has to be an investment in the technology to bring down the cost of SAF. The engines can already take SAF, the ones that we currently have, but the cost of SAF is a multiple of what Jet A1 costs. And unless we invest heavily as a global effort to do that, which will be a very significant amount, then SAF will continue to be a marginal product that is significantly more expensive than Jet A1. And if you think of just take, one of the largest airlines in the world will probably spend 10 billion on fuel when they get back to 2019 levels. If you're going to ask them to spend 25 billion for the same level of gas, they ain't going to do it. And it's not something that can be done, I believe, on a regional basis, because you can't say to airlines in Europe, for example, you have to fly SAF or 50% SAF, and then other airlines in the world don't have that obligation upon them. Then our airlines will be at a huge disadvantage, or else the governments of Europe has to subsidize those, which is never a good thing either. I think rather than subsidies, it'd be better to tackle the root cause and say, look, the inconvenient truth is that the world is powered by oil and gas. If we want that to change, then we have to go and invest significantly in new technologies.
Yeah, I think that theme we have seen, we've been chatting for the purpose of the board. SAF is obviously the current and big play, and you got to back it right from a government perspective. Make the more it's mass produced, the more it becomes cost effective, and you can start to reduce that footprint in the near term. Can I ask you, obviously, one of the parties who'll be a key driver on ESGs around OEMs, and you're a huge customer of those, one of their largest, right? Your thoughts on whether and probably less so for you because you're already such a big customer already, but your thoughts over how the pandemic might give a shift to how OEMs view or interact with lessors. Do you think it's going to have a longer term impact on that relationship?
I think it will for a few, but it's always been that way. The OEMs don't care about that many customers. Where they really care. Everybody says they get a great deal with the OEMs, but they just don't. Most people don't get a good deal with the OEMs. That would go for airlines as well. The airlines might get a lower price initially than some of the lessors, but then the OEMs will stack the order so that they know the airlines will have to come back and defer airplanes, and then they'll reprice them, hold on to their PDPs. So I think the OEMs have certainly greater appreciation for the necessity of lessors in a downturn. That's without doubt. That's for sure. And just the buying power, as the lessors are now buying over 50% of all the aircraft that the OEMs produce. But I think the OEMs will be, as they always have been, there's a few customers they care about, and then the rest. Unless with the OEMs, the things they care about from the lessor perspective, A, can you pay for the aircraft? B, if you're doing spec orders, can you actually place them? Do you have the infrastructure to place them? Because even if you're willing to pay a lot, it always ends in tears if a lessor says to the OEM, look, I can't place the airplane, I haven't got a home for it. And the airplane is in the production schedule, they can't take it out. There's a huge disruption that comes from that. And then so that you've got, can you pay for it? Can you place it? And then most importantly, can you influence the decision, either the absolute decision of which OEM to go with or the timing of when those aircraft can be delivered? And very, very, very few, it's not, less than obviously 2 or 3 can are in that bucket. That's for sure. So look, I think the OEMs certainly have a greater appreciation overall for the industry. I think what's more likely to happen actually is that we will see airlines, the price that lessors and airlines pay for assets probably close significantly. I think we're seeing that already, where the gap is narrowing, and that the OEMs are getting wise to the fact that, why do we want to give an airline $4 or $5 million pop on a sale leaseback transaction when, of course, we need to give them some discount. We need to incent them to take the airplane. But we as OEMs, are we just transferring profit from our shareholders to the shareholders of the airlines unnecessarily? And certainly when you look at some airlines, I think it's obvious that shareholders of the OEMs would say, what were you doing, guys? You don't need to do that anymore. You should be charging the airlines more for the assets. And I think that's something that will happen, because the shareholders, just won't put up with the OEMs leaving so much money on the table for the airlines. Or the OEM shareholders won't put up with the OEMs just leaving so much money. You need to do it when you're introducing a product. You need to seed the product, but now the product is seeded. I think that we will see the prices that airlines are getting charged move up.
And just in closing, Aengus, can I ask you, as you look out, over the course of this year and beyond, your optimism levels. So as you look out at the market, and I appreciate variance of concern, who knows where we're going, lots of these different things, right? But how optimistic are you both for the wider aviation space and then specifically AerCap?
Well, I'm more concerned about AerCap than anything else, obviously. So I'm pretty optimistic about AerCap's outlook for sure. As we look at the business now, be it on the fixed wing side, the engine side, the rotary business, and on the industry overall, look, I really feel, as I said at the start, that we will see 2019 traffic levels in many parts of the world this summer. There'll be parts of the world that will take longer. Southeast Asia, China will be the ones I suspect that will lag. But I do think we're going to get back to even the one wide body market where I think we'll get close, not quite there, obviously, but I think we'll recover a lot is on the North Atlantic market as we go through this year. So I think the desire of humans to travel has not been dimmed by this pandemic. I think, if anything, it's probably increased somewhat, and we want to take advantage of every day and see as much of this beautiful planet as they can. So I'd be optimistic over the 2022. I mean, certainly the winter it's choppy. There's no question about that. January, February, March. But I think we can be optimistic about a good Easter and a good summer, and we'll crack on from there.
Aengus, as always, I'd like to thank you for your excellent insights. On behalf of KPMG and Airline Economics, wish you and AerCap a very successful 2022.
Thank you very much, Joe, and the same to you and KPMG.